Hello and welcome back to Logan Shares. On this channel, I'm sharing things that I have done, currently do, and plan to do in order to retire very rich and very early. These are things like building up your savings, building up your credit score, investing in retirement accounts, investing in the stock market, and much more. If you want to keep seeing more tips and tricks from me, go ahead and subscribe to my channel because I upload every Wednesday. Today's video is inspired by my old friend Wendy from high school. Hey Wendy, I hope this helps. Let's get started. So like I said, today I'll be sharing with you ways that you can build up your credit score. But before we start, what even is a credit score? A credit score is a number between 300 and 850, and that number depicts a person's credit worthiness or trustworthiness. So the higher your score, the better a borrower, which is a person like you and me, looks to potential lenders, who are the people who will give us the loans or services. So depending on what your score is, it can either cost you a lot of money or save you a lot of money in the long run. Currently, the score rankings are as follows. 800 to 850 is excellent. 740 to 799 is very good. 670 to 739 is good. 580 to 669 is fair, and 300 to 579 is poor, which means not very good, not poor like you don't got no money. Now that we have a grasp of what a credit score is, why do we even need a good credit score? What is the importance? What is the purpose? There are actually a lot of ways that a good credit score can help you. You can get lower or the lowest offered interest rates when you buy things like cars or houses, or in case of emergencies, credit cards with low interest rates can save you hundreds or thousands of dollars. Another thing is that you can get better rates for your car and home insurance, and when you buy a car or a home, you won't need anyone to co-sign for you. For example, when you're younger, you go to buy a house or a car. The loan companies don't trust you just yet, so they want to get your parents to co-sign on that loan with you, so that if you ever can't pay, they will have to. But with a good credit score, you won't need any co-signers for anything. Along with that, it's much easier to get approved for credit cards, houses, apartments, or a new car. Companies will give you priority over the people with lower credit scores because you seem more dependable and more trustworthy. Basically, all they want to know is that you're going to pay. Something that my credit score has helped me with is getting the lowest possible rate for a security deposit in my apartment. Now, usually an apartment security deposit is going to range between $150 to a full month's rent. And because of my credit score, I was only required to pay the minimum of $150. Right now, I live on my own and my rent is $1,180 a month. If I had a bad credit score, I would have paid $1,180 instead of $150. When you do the math, $1,180 minus $150 equals $1,030 saved this year already just for having a good credit score. Not only can you get the lowest possible rates, but you can also avoid having security deposits altogether. Utility and internet companies like Dominion Energy and Xfinity, which is what I have, told me that I didn't even need to make a security deposit because my credit score was high enough. So now that we know what a credit score is, and we know the importance of good credit, now it's time I tell you how to increase your credit score. Number one is open credit cards. Now, don't get crazy. I'm not telling you all to get 1,000 credit cards, max them all out, and fall into debt. It's just that having credit cards is one of the easiest ways to build up your credit score. Now let's take a look at the advantages of credit cards. Most cards offer perks. These can be in the form of cashback rewards, gift certificates, coupon rewards, travel miles, percentages off your purchase, and more. For instance, my main credit card that I use for everything every day gives me 3% back on gas and groceries and 1% back on everything else. This is literally free money that I get to save just for using my credit card for all my purchases. My Banana Republic credit card offers an extra 10% off whenever you use your card to purchase things in-store or online, and you get gift certificates when you spend a certain amount of money. Recently, I was looking at a new duvet on HomeDepot.com that costed $80, but they were offering $25 off of your purchase of $50 or more if you open a new credit card. So what did I do? I opened a new credit card and got my $25 off. Now, all of this can actually sound a lot easier than it is. When I was first starting out, my credit score was 540, which means I was declined by all the major credit card companies. I applied to Discover, Capital One, and other things like that, but I had a really low score, so I kept getting denied. If this is happening to you and you don't have any cards yet at all, you need to get your first one, and this is how. I went to my local bank and applied for a credit card there as well. Decline! fine. But my banker let me know about this special thing called a secured credit card. For the secured credit card, you put your own money into a secured account that you can't access for a certain amount of time. That period of time is determined by your bank. The period of time given to me was 12 months. So the amount of money that you put into this secured account is your new credit limit. And a credit limit is basically the maximum amount of money that you are able to borrow. And in mine, I put in $1,000. Now, since all a credit card is borrowing money and paying it back, the bank allows you to use your secured credit card for borrowing your own money from your secured account and paying yourself back. This means that you can build up your credit with a real credit card, but you're using your money instead of the bank's money. After my 12-month period ended, I was proven to be trustworthy, so the bank gave me back my $1,000 and upgraded me to a real credit card, where I would start to borrow their money instead of my own. While you're in this 12-month process, your credit should be steadily going up because you have a new credit line open. After a few months, try again for a major credit card, one like Discover, Capital One, or any of the other major banks. And if you still aren't there yet because they're hard to get, just keep applying for more store cards. Step 2 for building your credit score is keep your credit card usage low. You really need to only be using about 30% of your credit limit. If your combined limit between all your cards is $1,000, try to make sure that the combined usage at the end of your billing cycles is $300 or less. This means that if you spend your full credit limit of $1,000, you should pay at least $700 of your balances before that billing cycle ends. Because remember, we want to keep our usage at 30% or less. Some ways to keep up with what you owe and avoid missing payments, late fees, and paying interest are to pay the full amount of your bill every month or swipe your card and immediately pay it off. This will keep your usage percentage very low, but you'll still get all the perks from the cards that you own. Because remember, when you pay in cash or debit, you don't really get any of these perks, cashback, or incentives. A third way to help build your credit score is to call your credit card companies. As your credit score increases, you should be calling your credit card companies and ask to increase your credit limits, which will also help with keeping your usage percentage low. And tip number 4 that I'm sharing with you today is keep your accounts open. I really don't know why, but sometimes when you close accounts or close a credit card, your score will drop. The more cards or accounts that you have open, the better your score can be. Because think, if you only have one credit card and you have nothing else on your credit report, it doesn't look as good as someone that has 8 credit cards open, and a school loan, and a mortgage, and a car payment, which all may seem very backwards. The reason is because these companies want to see if you are dependable enough to keep track of all of these things at the same time. And the way that this comes back around again to help your credit score is that since cards have credit limits, your credit report adds all of the credit limits together to create your percentage usage. So the higher combined credit limit means a lower percentage usage. Let's do the math. Let's say you start out with one credit card and the credit limit is $1,000. If your credit usage shows $300, it means you're using 30% of your credit limit. But if you have 5 to 10 credit cards with a combined limit of $10,000 altogether, and your usage for the month is still $300, this means that you're only using 3% of your credit limit. This means that you will basically always be within or lower than the 30% credit limit percentage usage. Now, I know that was a lot and some of it may have been confusing, so if you have any more questions, leave a comment down below and I'll be sure to reply to you. If you learned anything in this video today, make sure that you like the video, subscribe, and leave a comment down below about what you learned. Also, for more tips about building your credit score, building your savings accounts, investing in the stock market, investing in retirement accounts, and so much more, make sure you subscribe to my channel and turn on the notification bells because I post every Wednesday. And please leave a comment down below about what you want to see in my next videos. Again, thank you for watching and I'll see you next Wednesday.